Good morning to you. Thanks for joining us on today's episode of the Profit Point Show. And today will be a little bit different because during the stock market segment, we are going to be taking phone calls. But of course, during the stock market segment, we're going to be having the gainers and losers as of yesterday, top 5 of them. And then we're going to do sectoral review. Sectoral review for 2021 preview rather. We're considering the consumer goods, and of course, some results also came into the market during the week, which we also consider. So I'm going to give a phone line during the course of the show for you to call in to ask questions regarding the stock market. And it's just going to be for 10 minutes. So we have just a short window. So ensure that you call in within the time. I'll try as much as possible to answer your questions. Then we go on to the business segment where we talk about internet control system for businesses. All of this after the break. We'll be right back. Stay with us. Thank you. Welcome back to the Profit Point Show, and I have in the studio Ambrose Omodin. Ambrose, as usual, my investment analyst from Invest Data Limited.
Yeah, I'm very, very fine.
All right. You know, every time I'm talking to Invest Data PLC, is that the time you actually came to this?
No, we're working
You're
on
working
that.
on it.
Yeah, we're working on it.
All right.
So we can sell our shares to Nigerians because I believe information is key. And if you already have information, you can expect. And
Sure.
since we're selling information, we want you to be part of it.
That's good. I look forward to that. Thanks for joining again.
Yeah.
All right, let's go over and review the gainers and losers as of yesterday. Top 5 gainers and losers as of yesterday. Seplat top the gainer stock. Seplat gained 10%, closing at 583 naira. Followed by Aiko, that gained 5.22%. Then Cornerstone, then USC Property, and Cortex. Then the losers chart we had Japan Gold losing full 10%. Name Insurance following suit. Champions Brewery, MPF Microfinance, and Linkage Assurance. Looking at the rate of gain, the percentage gain in top gainers, you can see that it's really not a lot as compared to the rate of losers in the market. So we can see that the market is still on the downtrend.
Yeah, correct.
Okay. All right. So these gainers step out, obviously. Crude oil price is going up. So do you think this is what is reflecting?
Yeah, it's part of it, and also they are kind of diversified to gas business too, which is also a plus for the company. And for them to be consistent in their dividend payment, even when the account is in red, it's a plus for the company. Then that boosts investors' confidence that, with crude oil price rising and invest into gas, the nearest future will see the account turning green. And if you're able to pay dividend when they are in red because of robust reserve or repeated earnings, that means they can only sustain dividend going forward. And also if you look at the crude oil price, the movement of crude oil price, tell you that it's going somewhere. And also many global traders in the oil market have also projected that oil will hit another $100, and which is good for Nigeria economy and for the world at large. Because during the COVID-19 issue, 2020 was something else. It affected both the oil market and the economy generally. But now oil is bouncing back. That will drive global economic recovery, and also for that, I see Seplat having a huge gain from that kind of movement. For me, investors in Seplat should go. And also, if you look at Seplat, what we call book to share value. I mean, well, there is about 1,000 something, and it's selling below 600. For me, it's an attractive stock to look at, whether if you're a long-term investor. And also, their share in issue is very small. That means the stock price will also call them form of defensive stock because it don't go you like all those penny stocks. And for that, if you really want to balance your portfolio, you have that kind of stock in that. And also, looking at that, just coming back home now, we're just increasing our fuel price on a daily basis. Yeah, to local fuel, but that sector is changing because this little margin in increment also reflects on their numbers. For that, investors are looking the world of oil and gas sector. For that, I think that's why stock like Owando, anywhere I am, I also tell people that if you have large hearts, you have large, or not that.
I'm not long-term investor. No, I don't recommend Owando
for if you have large hearts and also you may want to speculate. You want to speculate, you can take position on Owando. Why I say so is that Okwara is having issue with the regulator as we speak now. Once it is sorted out, that stock will look up. Why? Owando has even access more than Seplat in that crude oil business that they are. And for me, that's why the Owando is not transparent. And that trust is what have kept the price below 4 naira. Because investors are not seeing what they expected from the company. But I believe that they will turn a new leaf after settling what they said. That also boosts Wando price. Even as high as 10 naira. And if you are buying at 4 naira as a speculator, and you're going to wait, don't just say you're expecting dividend. Rule it out of your mind. You're just expecting that this guy will do capital appreciation in terms of market sentiment.
Ambrose, now my challenge is, this is not the first time Wando is having issues with the regulation. This is not the first time they're coming to the market with news. There was a time they claimed the Konoko Phillips. That's more than 5 years.
For a rally now, when it came.
My point is, Wando has been consistent in being inconsistent. And I don't know where you're getting your faith from. You're not believing them. I probably would prefer to just watch and see if, for this one time, they do, differently.
Yeah.
Then we can say, Then jumping into it, then people just talking.
No, just like we'll see that investment is also a risk. And when you see your fat buck of folding, look at it. But Wando really want to expand its business too.
Why don't you just wait for them to expand?
They are hungry to come to the market to ask for shareholders to give their money again. And when they must know there must be what AGM. And because of sex saying there's no AGM for now, they are itching. Their seat is ruling because they want to talk to shareholders. We want to expand this, they want to do this kind of business. They want to come with another business idea to shareholders. We want to raise funds. But because there's no AGM, Wando is not comfortable. That's why they are not going to carry their leg to go and beg the regulator and let's settle. Because why? Because they see opportunity where they cannot play. For me, that's the day I'm looking at. When they come to the market to raise money, Wando will not come and raise money, they want to sell it for 5 naira. Want to sell it for 7 naira. Watch the flat and others are that up. Wando will say, okay, let's do our right issue at 10 naira. Forget that they have done right to at 25 naira, 30 naira before now. If it's at 10 naira again, it's not for me, it's a cheap price. They do the head to Wando at 3 naira, 4 naira. The price will likely move up, no matter how you see it.
Okay.
That's for speculators.
You're an analyst, I'm a stockbroker. So I'm just going, I don't have faith in Wando until things improve. I'm not going to recommend Wando. But maybe for traders, people that can flip in and out. Yeah, but for long term.
No. I've said it for dividend, don't look the work for Wando for now.
Okay, so over to, we got Aiko, Cornerstone.
No, Aiko also declared a bonus share for the tech account for 2020. That is part of why market is responding. No, for me, it's not the way expected because liquidity in the market is also slowing down. Ideally, liquidity in the market is getting like 10% the way Seplar did, but because liquidity in the market is just slow, looking for another opportunity due to rising yield in the money market and bond market. Funds are not being divided now. Some funds are staying in the equity market. So before 2020 and January, funds are entering the market powerfully. Price was running. But now that the regulatory adjustment in Treasury bill rate, people are also, people that are risk adverse, they don't want to go take risk. Forgetting that the yield in the equity market now is better than where you are going to go. They don't want to take risk. They prefer to go to where they have safety and put them on. But finally, I see that the yield in the equity market is higher than going to put your money in Treasury bill for 1 year and we're expecting 5.5. But in a stock that I enter, even as earnings are coming, some companies are giving me a dividend yield of 12%, 11% within less than 3 months. Because, for example, Nigeria Bank released the result on the 14th of February. Then they're saying they're going to do their AGM on the 16th of March. They will declare dividend of 2 naira 70 kobo. Within the short period, we have made more than 11% without capital appreciation. No, for me, it's better than me to do such thing than go and keep my money in Treasury bill for 1 year to get. But for that, risk advert, as you said, that you can go still look at it. But a good investor should have a balanced portfolio. Have your some for in your save vehicle. Have some in the risk where you can also make more. That's why you have, I call it finance management. Have some stuff that are in estate, some are in pension fund, some are in stock, and some also in money market. So it's about like this. No matter what happens to the economy, you are balanced.
Sure. Okay. Let's look at the gainers chart. Losers chart. Jacob Gold, Name Insurance, Champions, very interesting. That's the one that actually interested me. And yeah, that caught my interest here. Champions Brewery closed at 1.85 kobo. That's the stock coming from 3 naira plus the backdrop of Anakin's buying into them. So what's going on? People still taking profit?
Yes.
Are they planning on running it back to 50 kobo?
It's possible it goes back to 90 kobo, but part of that push it up was just market news and sentiment. So as Anakin is coming in and prior to rally, it's expected that people want to take profit. Also consider the Japan Gold we are just mentioning. Now, Japan Gold topping the loser is not surprised. But one thing that we should know that Japan Gold has rallied on a sentiment, and that sentiment is still there. Any information that come out that whether they have started mining gold anywhere, the price will also go up again. That means you are pushing at this low price. For me, if you're a speculator too, you can be taking this little by little dilute that because that's the question that will take it up also do the same thing. Now we're not expecting them because of fundamental dividend payment, no. But what now you see the market again, oh, federal government have approved their mining site. Oh, they are here in so state, and I'll tell you the price because if you look at the price of goods, in the commodity market, you should know where their price should be. That's really the advantage if I just comment down and become attractive for those that are taking risk, but not for dividend income investor.
So we're still trading at the back level. The real information.
Yeah, information. Yeah.
So we're waiting.
Information.
I hope this won't be another one anyway.
No, okay. Do another one.
I have nothing against that. So don't mind.
No problem.
You invested in stock in the past and recommended it
to people.
People and just for your hands.
Don't disappoint you.
Just disappoint you.
I
don't mind.
I agree with you.
All right, then with the sugar, let's go into the auditor report that actually came during the week. Then with the sugar released their results. Revenue was up by 33.43%. Profit after tax was up by 33.16%. This is the kind of, I don't need to ask why is it up, down, why is the profit up, and why is the revenue down, you know.
Why?
It's just correlated.
Yes.
But then with the sugar, 2020, they actually brought out good results. That's what's it called. No, they're in the food and beverage, but they are not like the Cadbury or Nestle that are actually into, I mean, sugar can be used for so many things. That's my point. It's not only for retail.
It's a commodity that is not only used for only like can I export it to other
exactly.
places.
So they actually did well last year.
And also, price of sugar was up last year too.
Yeah. So dividend £1.50. How did the market take this?
No, actually, if you look at it, that are coming to the market, they beat expectation, but market is not reacting because liquidity. I tell you, liquidity is one of the major fundamentals for any equity market and sentiment. And when there's no liquidity, no matter how good result is, market will not react to it. But it's only those long-term investors that know what they are doing. When you see these results, you wait and take your video and be smiling. While traders will be waiting to price to come down. You as a dividend investor will be packing your dividend first. When it comes to a level, but they are waiting for a price because they buy at low and sell high. But when it is still dropping, they don't want to enter because you don't cut a fallen knife. So when it's coming down, they have to wait let it come to a support level. You are chopping your dividend. That's why for me, if you're a dividend investor, don't panic when the market is correcting because your dividend will come. And also, my discussion yesterday with some clients in the US, I was telling them that if you follow the billionaire investor in Nigeria, all over the world, you also become a billionaire. Not that you become a billionaire to their own level, but if you are putting 100, your that 100 will increase. Well, I mean, you will grow your 100. Why? The billionaires, they use their stocks to rate them. And look at when the market crashed in 2007, 2008 and 2009, all these companies were selling at below their fair value. But go and check all the stock that these billionaires in Nigeria have. They grow their dividend consistently. Because why? They have the highest chunk of the company. And because they want to maintain their lifestyle, I call them smart money, but they have to pay good dividend out. Pay good dividend out, that means price to go. Why prices are oscillating? It's not, they're not interested. Dividend because it comes to them, because they have the highest share of the company. Then if you really want to really play safe, look for this where you have these billionaires and enter.
Mimic their
investment. Yes, exactly.
The question now is, so how will I know what the billionaires are buying?
No, not that where the billionaires are, because they have the highest share in the company. For that, they pay themselves good dividend. That dividend alone, that's just if you are an income investor, take your strategy. Look for where the billionaires are, because those billionaires, they want to grow what they are payout because they want to support their lifestyle.
So basically, stocks that are consistent in dividend payment.
Yes.
Okay. Let's go to NASCON Halide PLC 2020 audited report. Revenue was up by £1.90. Profit after tax was up by 45.8%. So this is the kind of result I think what happened.
Yeah, if you look at their cost of sales, I have to go through the results for NASCON. It dropped of almost like 47% drop in the cost of sales, about from 20 billion to 13 billion. Wow. Cost of sales. I mean, that means they really reduce their, even also know how to manage them. But when you are managing your cost to get your fat bottom line, for me it's not sustainable because cost can bounce back. But what matters is that when a company is growing your top line, your bottom line, I've said that company thumb up. Why? Because that your top your operating cash flow will support your earnings. But when you are cutting costs, you are managing costs, and your bottom line is fat, it's good. We can't condemn you good to that company. But how long will you manage that cost? If things change, what matters is that breaking into a new market where you can grow your top line, your gross earnings, your revenue. You can grow them by entering new markets or introducing new products, expanding your product line. That means your earnings can be sustained. That is what I look at. But for me, if your operating cash flow is also another, is looking up, earnings looking up, dump up for that company. But when your earnings is looking up and your operating cash flow is looking down, that earnings will last. That means investors don't just because you say some company releasing first earnings is positive. Go back and look at the operating cash flow. Is it looking up the way the earnings is looking up? Because earnings is very important because a company will not pay you they're not making earnings, they're not making profit. They want to look at, oh, would the operating cash flow support that profitability level they are showing? If you can support it, go ahead. That means you expect good number and good dividend, because when they make earnings, they can pay you good dividend. For that, look at the numbers very well.
Well, they paid, they declared 40 kobo dividend, same as last time.
And our market has also reacted because of that. Because no matter how your number look like, whether good, looking up, if you really want investors very well, they will treat you.
All right. Nestle 2020 audited account revenue was up by 1.07%, and profit was down by 14.17%. All right, so Nestle, Cadbury, Unilever, we're expecting so much from them, but negative 14.17 from Nestle.
So that the year was not good.
Was not good. That's a serious indicator, because Nestle is a beautiful stock that is respected in and off the floor, management-wise, product line, the brand itself.
Just like what you just said, when people purchasing power is low. We mentioned a lot of sugar. Sugar is for industrial, and these days people are not even going for sugar, they're going for honey. That means for Tango to put that kind of number, sugar business is up. And also, if you look back to the third quarter result of flour mill that we discussed here, the arm of their sugar business also supported their bottom line. That means that business, sugar business for last year was up. But for NASCOM is also into agriculture-related business. If you know NASCOM too, you can see that the numbers are, even that I said top line was not, for that also have a lot of supported NASCOM, and also their cost and their cost of sales also supported them. But for Nestle, because it has to do with, they do personal products, children, and if people's purchasing power is low, your consumption will drop. I know before now, there are some people that they buy like almost a carton of Milo in their house for a month. But because the earnings are dropped, inflation is high, they might have to buy in what do you call it, in Nico, what do you call it, in the, not the carton again now. Sachet.
No. That you're watching your own.
Yeah. On that, it's very good, affect kind of, for me, it's tell you that the economy is still just struggling. But since the last GDP from Ross said we have moved from out of recession to about 0.11 in growth or recovery, it's a good sign. But you can see that also the result from this consumer sector is also pointing that there's little improvement in that sector. That means going forward to this year, we expect that let's see general improvement in all the consumer sector. Yeah.
And dividend was 35. They declared 35. There are 50 kobo.
Against
dividend. How much is the stock now there?
The stock is still at 145, 1,045, 1,440.
That's still high.
And with these earnings or this dividend for me is overpriced. Only that the shareholding structure of Nestle will support the price, because most of the shares are in Nestle International.
So we really will not see any dumping.
And also this, I said earlier that the kind of your portfolio, the kind of stock you use to play defense. But when you see the kind of Nestle drop it to a line below 1,000, it become attractive because it still bounce back. But with this kind of payout, I think the stock coming down a little.
But I don't see it getting below 1,000.
No, but it's coming down. I think I just down a little because better to take profit now. People are entered 1,000, expecting this result. Seeing this result, there's no need of waiting. You sell off now when they are just about. Like I said earlier, because of the shareholding structure, going down is always a problem. That's why people are defensive in their portfolio.
Yeah, I'm sure that many of all these institutional investors will not see it as a stock they actually want to dump. Because if you dump Nestle, what do you want to pick up? Really?
You can't buy Zenith Bank.
No, those banking stocks are they are not defensive stocks.
But they are income
stocks. They are income stocks, but they are not defensive stocks. No, really, no. No,
I bet you can't take Zenith. I like 50 million now. Buying Nestle with that 50 million will not make any money to me. One, their yield for dividend is less than 2%. But if I take Zenith Bank at this price, people at 25 now, I'm having about 12% yield.
Like you said, most banking stocks are income stocks. They are not expensive.
I make money now. I cannot come back to Nestle later.
See, God forbid us having 22,009 and this is tsunami.
No, that has gone.
That's gone. The rate at which is Zenith will fall. It's not the rate at which the Nestle will fall, even if there is a general issue in the market. But of course, we know that the rate at which Zenith will also. Now, when I say Zenith, I'm not saying
all the banks, all the
banking stuff. The rate at which they will also gain capital appreciation. Right? It's not the way Zenith is not going to. So they're like a fence. So you don't just break a fence.
For me, I look for income. I go for real capital.
When I'm talking about defense, I'm not looking at you. It's not for you. Alright, the last result here is Custodian Investment PLC. And they grew their gross earning by 22.2% and profit after tax by 112.73%.
This is another company in other financial sector that I say, I call them conglomerate company already. Why? Because they are into pension, they are into investment banking. No, they are into all investment. Even they are entering into real estate now because they understand investment. No, these are companies that acquire other insurance companies where they were custodian allied insurance. Now they are moved to custodian investments, the PSE. Now they have like other sectors or other subsidiaries that bring money for them. For me, it's a company that watch. Why? Look at their payments. So for the last 5 years, they have been consistent and going there, and they are quiet. But the result is now bringing them out. What I say the result, I say this is a company that is not lying, quiet, nobody knows. If you invest in kind of company, you won't regret. Now they are diverting into real estate. Knowing that real estate, if you have real estate in a high brand place, you might not sell. But if you decide to change your strategy and put your real estate, you have low income, and now they are doing a one bedroom self-contained, and they are paying little to get it. You will make sense. But when you are building in Ikoyi, people have access to buy it, and all the price are putting has to sell. Because
drop this your personal mentality. People have money to buy it.
No, I'm telling you,
you may not sell a lot. But maybe that one that you sell.
I say strategy. No, I say strategy. No, I believe these guys, they know what to do. And also looking at the team that might and also the numbers are already telling you that they are going somewhere. No, for me,
I mean, they made 6 billion profits additional 2019.
That is about 100% growth in there. And also the top line was up also with a good for me. These core results and I advise investors that are looking for steady dividend payment and capital acquisition to gradually go look at the stock and look the work.
How much is it now?
It's around 6 naira.
And they paid 45.
45 kobo plus their initial 15 kobo. That's about 55 kobo.
They paid.
That's what I'm saying. Look at it. But if you are really pensioner, you are looking at where you can earn money 2 times in a year. This kind of stuff, they pay you at every 6 months, and at the end of the year, you make money. They pay 15 kobo for 6 months last year. They are paying almost 45 again. That's about 55. For me, it's a good one for about 60. It's a good one for considering investment.
That's good. All right, thank you, Ambrose. With that break, and we go into the question and answer segment.
Okay.
So, the number to call 0803 0442 929. 0803 044 2929. 0803 044 2929. So call in and ask your questions regarding maybe what you've said, discussed here, or what we've discussed in the past, or you need recommendations on it. Just question in the stock market, basically. You have just 10 minutes for this. So the number again is 0803 044 2929. 0803 044 2929. So whilst we're waiting, let's take a preview of consumer goods for 2021. I mean, 2021, this is already March.
Yeah.
We're expecting the Q1 results.
Yes, even looking at the results that are coming from that sector, you have given insight what you expect in 2021. I see that the breakthrough in the COVID, this vaccine for COVID is a plus for the sector, and also it's also for the economy too, because when the economy is doing well, people earnings can improve, and it will impact. And there's no lockdown this year. You see the activities all over. That will also impact on them. For me, I see there's upside potential for those companies. Now that we are seeing their numbers are becoming better. If you look at the company in that sector, Flour Mill, Honeywell, you can look at their numbers so far. Only Nestle and Cadbury and Unilever that their numbers are looking a bit down. But others have shown that business is passing back. For me, I see that there's potential in that sector for this year. All you just do, look at those companies there that are still selling on their value in terms of looking at their numbers. And also don't forget that if you want to look at this sector, don't just look at the fundamentals alone. Look at the technical to know the right time to buy, because it's always the right price to buy any stock. But what people say, because the fundamental is like, people look at Nestle, you have good fundamental, the price is high. You enter such stock at that price, you stock there, you are not losing, you are not gaining, just like as you said, defensive. But if you really want to make money and trade, look at where the support level of this price. Look at that support level. We have the potential in that sector for this year. Then let me buy at a good price. If you buy a good price, when it goes up, you smile. But when you enter because the fundamental is good, you are not buying it. You'll be waiting. Because, like I said, Nestle is going to adjust down a little because of you. Don't say because of that, you don't go and buy on at the current price today. No, wait for that stock to adjust so that you can buy. And when it goes into the new year, so when you start seeing their first quarter improving, second quarter improving, market will respond to that. On the long run, and that's short of them, market will respond to the earnings of any company. And so I think we're expecting the sector to do well this year. Let investors look at those stocks that are selling below their book value and our fair value and take position. Because really, as the economy is improving, now that we're out of recession, we expect that government should look at their policy to sustain the recovery, not that we will not go back to recession again, because it's too fragile that we just gain 0.11 in GDP.
Okay. We have a caller, Prince Lukoya, calling from Abulela. Hello? Hello?
Hello, yes.
Good morning.
Good morning. How do I go into stock business? And which is the best stock to buy?
I can barely hear you.
I say, how do I go into stock business? And which is the best to buy?
How do you go into the stock business and know the
Yes,
stock
which
to
is
buy?
yes.
Okay. All right. Noted. Thank you, Prince. Thanks for calling. Yeah.
Go ahead.
But it's a stock business. So how will stock is actually an investment?
Yeah,
Some
no,
people see it as business.
you can do it as a business, but as a business, you have to train yourself. Interest, yes, for calling them, it has interest in it. It's not only don't have interest, you need to know the nitty of this business, the resume of this business. You need to know how to start and how to make money from it. It's not just this stock is good. Market can always go up and down. Whether market can even flog the expert in the market. But if you understand the rhythm of the market, you know when is the time. Because there's always a season for anything. There's always a timing, a cycle. For me, to start a good business for me is possible. You can use it as a business. Train yourself on it. Like what we do in Invest Data, we train people to do stock as business. And we are trained like more than 20 people that are doing that as business. But they are surviving. Why? Because if you know when to buy low and sell high, by using your technical analysis, knowing fundamental, you train and make money in the market. But like, your question is that, how will you know the best stock? You must know the business model behind any company numbers you are selling.
You can say best stock.
Yes,
best stock for life.
You must know
the best stock
you must know the business behind their numbers. Not only that, you must know the price to buy. This price, like I mentioned that Japan moved from around 20 kobo to 1 naira 60 kobo. If you are that kind of stuff, you have made hell of money. That same thing is coming down now. It's not because of the fundamental. I mean, if you are training yourself, you know how to use your technical analysis, sentiment report, to know when to buy and when to sell. For me, your question is good, and if you want to do that, you need proper training to do that business.
Which Ambrose does. So,
yeah.
Ambrose, just give your number, and please don't rush. That's training.
Okay, 080-281-64085. You can call me at any time. Then we can now schedule a meeting for you and tell you how to start the business of stock trading. It's not that you must be a stockbroker. No. Just get interest, train yourself, know how to combine your fundamental, technical, and sentiment. You are good to go. You don't need to even have an office. From your phone, you can be trading. From your laptop in the house, I do my trading most of the time from my house. Even though I'm in Abeokuta, I've given order this morning to buy for me. You don't need to sit down before a stockbroker. If you know how to do it where you can do as also part-time for your business. When you are making money in your trade, you can be setting some as an error towards the equity market to generate more money for you. It's all about understanding and also planning your financials.
The number again.
Yeah, 080-281-64085.
All right. Thank you, Amber. So you can still call in. We still have a few minutes to go. And now, my challenge with consumer goods, consumer goods sector, is that I feel that sector should be divided into two.
Okay.
For the likes of flour mills, sugar, Honeywell should be on one side. Sugar. And Nestle and Cadbury should be on one side. And Unilever should be on one side. Because even though they're into food, consumer goods, they are kind of different. And yeah, there's claim that we're out of recession. Yeah. But the fact is, disposable income is too low.
Yeah.
We cannot guarantee that petrol is coming down. We can almost guarantee that it's going up. Yeah. And once it's up, you can always guarantee that everything goes up. And when everything goes up, how are we supposed to survive? So how are we supposed to not expect a better result from the likes of Nestle, from the likes of Cadbury and Unilever? Nestle is lucky because the stocks are not so fragmented. Exactly, that's one thing. Even the people holding the stocks, it's not a stock that can just go on offer. There's nothing Nestle on offer. But the likes of Cadbury and Unilever, there's a risk that the more they don't bring out good results, the more the market flogs them. Yeah. So, what do you have to say to this? The likes of sugar can still survive this year.
Yeah, actually, as an investor, I say that stocks are not like women that you marry. Anything that you enter that is not doing well, sell it off and go to the There are some sectors, like as we speak now, the market is correcting, pulling back, but there are some sectors that are giving us a sign already that this sector will outperform the market, even at this period of pullback. So sector, you move your fund to it and position. And that is why we're having a master class, coming April 3rd. That master class is purely for those that want to make money in a down market and in a bull market. When market is down or up, you make money. But if you understand it, when market is up, people complaining. You want to run out of the market? No. There's opportunity that same market you are running out. I mean, people that have lost money in 2009, 2008, this is the time to come back to the market because the same market you lost money, that's why you can make back the money because there's opportunity in this market. The market become more transparent, played by global, international and expert. For me, come back to this market, only that you need to be informed. Because the market 2007, 2008 is very from today because the market has become information driven with the help of what technology. Just key to the technology world and come and make money in the equity market.
So you recommend the Cadbury and Unilever?
For now, the two, for me, the dividend payment for Unilever is slim, and because they are not, accounts already in red. But for Cadbury, have a decline in their result that they are unaudited in January. For that, the two, I would advise if you are there, you can start selling off there. Look for where you have good dividend, like dividend coming from UCAP, coming from Zenith Bank. Where you can, because this market, your market adjusting now. Look for something that has good dividend and play with them because now you are sure of getting additional money. What your investment is there for you. For me, you have to pay dividend now that the market.
But we can still go to the likes of flour mills.
Yeah. For flour mill, for me, I would advise that you hold on flour mill to let it, because flour mill has March at year end. We're already in March now. Before you can hit the market to be around June, July. For me, jumping into this hour now is a bit long. Just hold on for like end of April to start positioning stuff like flour mill. Because flour mill has given us first quarter results positive, second positive, third quarter. For that, it's a sign that good things are waiting investor in that stuff. Yeah.
Thank you very much, Ambrose. Thanks for joining us.
Thanks
Segment
for
as usual.
Yeah.
All right, this brings us to the end of this segment, stock market. We're going to break, and when we return, we go to the business segment where we talk about internet control for business. Stay with us. We'll be right back. Thank you.